Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday, the 7th of April, comes to you from London. And we are back after 4 days off for Easter. I hope you've had a good Easter. And looking at the markets, it's all about what's going to unfold in the Middle East in the next 24 to 48 hours. So that is the key thing. Markets are very uncertain on that. This is a 60-minute chart of the dollar index. A selling thrust has produced this downside target, and a previous buying thrust has produced this upside target. Neither target is activated. This one will turn green with a new high. This one will turn red with a new low. That's how the targets work. And the key thing here is that we are just in a game of wait and see on the dollar, and that means most other currencies are in the same situation. Looking at Bitcoin, we have had a little upside target that has been met, but that, of course, is counter trend when we look at the daily charts. So those with 60-minute charts, looking at the daily chart, we've got a pretty important level here. These round levels are always important. 65,000 psychologically important, and 60,000 is the low point where we bounced. And we talk about support and resistance. If you go to our resources and look at the previous LSEG masterclasses, support and resistance is a really good one. Patterns and Dow theory, these are worth watching if you want to understand these concepts properly. Now, looking at markets, we've got a fairly flat situation for US Open today, virtually unchanged, and that is just really emphasizing the uncertainty. We've got a low point now on the Nasdaq, on the S&P, and on the Nasdaq, which we now need to look at for holding. Downside target still there on the Nasdaq, so there's no escaping that. We've talked about the fact that to deactivate this upside, to negate this downside target, we have to move to a new high above 26,000. So that's really hanging over us, and we are below the cloud. So no matter what the outcome in the Middle East, the stock markets, a lot of damage has been done. Looking at the UK market, we have bounced on the lagging line on the cloud, so that is looking a little bit better than the US market. So that's quite key there, seeing that lagging line bounce. The DAX is less good. It has broken that support. We've got back above the support level there. That was the future. This is the cash. So we need to really hold that round level there. It's about 23,000 on the DAX. So that's quite key as well. Japan is probably still our biggest worry globally. Japanese stocks, we've got a downside target. Not so much a worry there for the stock market, but really one of the key areas is the yen. Dollar buys more yen. We're sitting at 160 at the moment, just below 160, but that 160 level is a really important level for the yen and definitely one to watch. And we've got a target to 163, and that just starts to increase the pain. And of course, if we look at Japanese bond yields, that's an area where we've been really concerned. And it's quite interesting that the market was concerned about Japanese bond yields back in January when we were sitting at 2.35. Now we're sitting at 2.4, and the market is distracted by everything that's going on in the Middle East. But Japan, being the most indebted country in the world with a GDP ratio of 250%, and these interest rates look low, but the fact is the debt that they have to service is huge, and this is a huge burden on the Japanese economy. Concerns will be that they'll need to sell US treasuries in order to buy more Japanese bonds. And in fact, Japanese bonds are very heavily supported locally in Japan. But this is a really key chart to watch. And we do have a target to another 6% higher to 2.54%. And I think it's fair to say that if we see Japanese bond yields going through 2.5%, that is going to ring quite a lot of alarm bells globally. US bond yields are fairly flat at the moment, but the target is there. UK bond yields this morning, the gilt, 10-year gilt, again, target is in place. You can't ignore this. Germany, these targets are all there, multiple targets on German bond yields. Really does suggest we're going higher. 3% there for Germany, and that is really quite key. UK, we're sitting at nearly 5%, and Italy at 4%, what we would give to be at those levels. And Australia is also above that 5%, just nudging back below 5%, but we do. And we have an unactivated downside target, but the pressure is upwards and we're above the trend there. So that's quite key. Looking at commodities, well, all eyes on crude oil, of course. So, and I do analyze that every morning for clients. We are watching to see, we've got upside targets here on the 60-minute chart. So that is really looking quite bullish, pushing to new highs there. And that's the key thing. All eyes on really what happens in the Middle East, but the chart is bullish still. Looking at soft commodities, really quite interesting. We're seeing here quite a lot of soft commodities selling off. I'm producing my soft commodities report for clients today. We're seeing softs looking weaker, grains looking weaker, oil seeds have had sort of relative strength, but here we are just seeing soft commodities coming off. So a little bit of respite there. And then looking at the tech majors in the US, we've got Amazon still below the cloud, Apple not yet activating that downside target, so looking a little bit stronger than most others, but still below the cloud on the daily. Google, remember, was the strongest looking chart at the beginning. But the key point here is that even this chart has got a downside target now. Microsoft has been one of the weakest looking tech stocks, from 550 down to 350, a really massive sell-off there, passing the downside target. And Nvidia, the 170 level is critical for Nvidia. We've bounced back above that, but we do have 3 downside targets. So US tech still looking pretty worrying. If we look at the Dow 30 constituents, you can see here that we had, on balance yesterday, the US market was open. We had more risers than fallers. Hopes of peace talks really filtering through. And again, in the NASDAQ, we had some pretty strong performers, Micron. Yet, this is really quite an interesting one, a bit like Nvidia, just above the cloud, but really stellar results, but not enough to carry the stock higher and not reaching the upside target. Looking at the UK market, this is an interesting one this morning. Sage, higher low, higher high. That's the Dow theory. Do watch this one on Dow theory on the resources, but it is below the cloud. So we would not be surprised to see a failed recovery, but that is a sign really of a higher low, higher high, classic Dow theory, and we have got an upside target there, but you are fighting the trend, so that's a key factor. Many other stocks looking strong, of course. BP, no surprises there that we're seeing oil prices having a big factor there. Shell, another one, of course, in the pushing to new highs, really has seen a big move there. But the key thing today is watching that crude oil chart. And if you're watching that chart, you'll be watching for a break on the 60-minute, waiting to see if we activate another new upside target, train tracks. And then if you're looking at the shorter term, you'll be going to the 10-minute chart and even the 1-minute chart, which is a little bit more up and down, of course, with the volatility in the day. But it's a critical 24 hours. But again, a lot of damage has already been done. That's it for today. Until tomorrow, happy charting. Bye for now.